Welcome to Top of Mind, the show where we talk to real estate industry insiders and experts about the biggest trends impacting the market today. Enjoy the show.
Mike Simonsen here. Welcome to the Top of Mind podcast. Thanks for joining us. The Top of Mind podcast is where I talk to the smartest leaders, thinkers, and doers in the real estate industry to provide context and perspectives beyond the market data that we at Altos Research do every week to really get the context and the trends and ideas about the future. If you're not familiar with Altos, we track every home for sale in the country, all the pricing and supply and demand, all the changes in that data. And we do that analytics and make it available to you before you see it in the traditional channels. People desperately need to know what's going on in the housing market right now, especially as the landscape is changing so rapidly right now. And so if you're needing to know about the data for you, for your local market, visit altosresearch.com. You can book time with the team for free consultation on how you can use market data in your business. But without further ado, I'm thrilled to introduce my guest today, a real leader, thinker, and doer in the real estate industry, Johnny Wolff. Johnny is the CEO and founder of HomeRoom, one of the fastest growing investing platforms in the US. HomeRoom simplifies out-of-state investing and streamlines affordable renting. It's an interesting combination. The company's marketplace connects rental property investors seeking a turnkey, high-yield experience with renters seeking modern yet affordable housing. So we're going to spend some time understanding how we're executing on this. It's a cool concept. I'm interested in more depth. So, Johnny, welcome.
Hey, Mike, really happy to be here. Thanks for having me. And big fan of Altos Research, so really cool to be here.
Nice. That's great to see you. So let's start with HomeRoom. Give us the quick overview of what you're doing.
Yeah, so HomeRoom, we help real estate investors make 50% more rent, and we do that by helping them invest remotely and rent out each room separately. And so, the idea for the company was started when I moved to Austin, Texas, to reunite with 4 of my friends, and we could not find a landlord crazy enough to rent out to 5 roommates in a 5-bedroom house. So I bought a 3-bedroom house, added walls, and we had a 5-bedroom house. And it was a really cool living experience, shared common areas, but I made great returns. And I was making way more rent than someone would make renting the same house to a single family. And I had a few friends who were super excited about it and wanted me to help them invest how I was doing it. And so that's how HomeRoom was born.
I love it. It's the personal need, right? The personal need. That's great. Altos was started with the personal need too. So the concept is you're doing roommates, shared space, and you're using the HomeRoom platform to bring those roommates together and marrying it to the investor?
Yeah. So, we think of we're a marketplace, Airbnb type marketplace where, there's homes, and instead of short-term splitting time up, we actually split up space. So our tenants come in, stay for, 16 months on average. And our platform drives the tenants to that platform. One thing we do different than what Airbnb does is we help investors find and buy these homes and set them up according to our specifications. So that makes it a bit more investor focused. But at the end of the day, your home is operating a lot like an Airbnb in the sense that it's on a marketplace. Our platform is driving tenants into your space, and you're making more money than you could in any other way.
So is it? Do you feel like it's more? Is it more driven as that renter experience, or is it more driven as the investor experience?
Marketplaces, it's kind of chicken or egg, right? The truth is that the tenant experience is the foundation for what we're doing, right? And the need for affordable housing at its core really is what's driving more and more people to live with roommates. It's been trending upwards over the last 4 decades, from 11% in the 80s to 26% of young adults are living with roommates. And so that's really that's how we started the thing, is how do we serve that group? And over time we evolved and realized hey, the supply side and the investors are really a massive part of that equation. Good news though, If you can cater to the roommates in the right way, it actually helps the investors too. And now you have a really nice ecosystem for both sides to benefit from.
That's fascinating. So it's up to 26% of young adults live currently with roommates.
Yeah, 26%. It's crazy.
That's
it's
fascinating.
crazy.
And
yeah,
so,
like 20 million people.
And so then, as a as a person who's looking for roommates, I go to HomeRoom and I go find a place in Austin to stay. Yeah.
Correct. Yeah. Yeah. If you're looking for roommates, you would jump on the HomeRoom website. You'd be able to take a 3D tour of a property. You could be able to see who the roommates are, and then you'd be able to apply, in 15 seconds for one of the rooms.
Got it. And then, and there's a lot of like room sharing and, post Airbnb, a lot of those types of, couch surfing, all of the things
Sure.
that people are happy to like have proven to be happy to go try. At least. So like that seems like there's a lot of momentum.
Definitely a lot of momentum in the sharing. I mean, this is just sort of like spillover from the sharing economy, right? It's a sharing economy in space and living. Like people wanted to make it work. They want to figure out how to make that work. This type of living, I think, is it's a very nice, you can do it really nice with Airbnb short term, but like the long term option in the sharing economy, I think was difficult for a big market. And I think this model is exactly kind of what the market needed there.
That's fascinating. So, and then on the investor side, now I'm an investor, and do I go to HomeRoom to find properties?
Yeah. So my co-founder Mike, he was actually a data scientist from Airbnb, and so he's built an API connector and calculation tool that will actually find homes on the MLS that match our criteria. And so we actually highly recommend you come to HomeRoom to find the property. We do take, if you already have a property, you can put it on our platform, just like Airbnb. But most of our investors are finding the properties through kind of our sourcing algorithm. And then we have kind of a process where we say, hey, this is how you buy. We'll set you up with the right vendors to do it. And then you add it to the platform, and then we'll drive tenants into your home.
Nice. Okay. So that's really cool. Yeah. So you get sort of the advantage, or it's like, one of the fears of investing in rental property in another city are all of the, like, what do I do about the tenants and, all of that remote management stuff. So it sounds like you're tackling some of those fears for investors.
Yeah, we make it so it's completely turnkey for the investor. The investor doesn't have to do anything. We get that question a lot. I was like, why can't investors just do this themselves? And the answer is they can. But with HomeRoom, it's, we've done it for a long time. It's easier and we do it better. And so we think you'll make even more rent with us, even net of kind of what our take is.
Yeah.
Platform.
Yeah. I can change the oil in my car too, but I don't. Right?
Sure. Yeah, I mean, same here.
It's like, and we do that with Altos, with the Altos research data too. It's like, any agent can go get all the data, and they could go prepare the visualizations, and they could go do the analytics. Like, you can do that work yourself, but are you really going to? Right? And isn't it more likely that you don't do that work and then leave the opportunity untouched?
Yeah, I mean, you can grow all your own food.
Yes, right.
Like there's a lot of things you can do yourself that we pay for. Right?
That's great.
It's usually better, and yeah.
How do you identify like properties that, like you said, 15% better returns? Is that in the tenant side, or is that in the property selection side, your better returns?
It's a mix of the two. The right form factor of home is really important, right? So we're looking for with more bedrooms, you can do better with the kind of a co-living or roommate situation. So if you buy like a 3-bedroom, 2-bath that maybe you can't add a bedroom to, your returns aren't going to be quite as good as that. But with our selection engine, we'll find homes that match that, and you'll get, we'll have a lot of examples of homes that rented for $2,000 before we bought it, or one of our investors bought it, and then it would rent for $3,000 or $3,500 after it was converted into one of our spaces. So it's really a mixture. You identify the home correctly, and then you have the ability to rapidly get the best price for rooms. So you have to do both, right? Yep. And that's kind of a lot of what this marketplace is there's like, it's two things at the same time at a really good level.
Nice. Are you're geographically focused now? You're doing a handful of markets. Where's your focus?
Our focus, we started in Kansas City. That's where, and I lived in the basement of our first ever property there for 3 years, kind of fine tuning the product and living really affordably because I was starting a business and didn't have it, and I think you know how that goes.
I know how that goes.
Yeah, it's not glamorous, you don't get to eat the nicest stuff, or live in the nicest places. So we're now in 8 metros. We're our number 2. Dallas actually has surpassed Kansas City as our biggest hub of our company. We're also in Austin, San Antonio, Indianapolis, Tampa. We have a presence in Pittsburgh, and we're expanding into Phoenix. So we're pretty rapid expansion. And it's exciting to see kind of the different demand for this type of living all over the nation.
Yeah. So Dallas, Austin, Phoenix, Tampa, those are pretty common investor markets.
Sure.
But you've also got Indy. Tell me about Indy as a site selection.
Yeah. So, one of the things that, when I was looking at turnkey investment options for private investors, I kept finding that these investment shops would just keep pitching like the city they were in because it was such a big part of like what they were selling, like because they were only in one city. So they're just like, Pittsburgh is the greatest market in the world. And then they just like back that up, which is not very agnostic, right? It's not very objective. You're very much selling. And so one of the things I want to do with HomeRoom is to spread our offering out and think about cities as a component to the offering to investors, and to say like, hey, it's not necessarily that Indy is better than Tampa, although you could argue it kind of either way, but it's just that each one is a different form factor, right? So one's a tech stock, one's like a high dividend kind of like blue chip. Like, how are we going to think about these? So Indy's going to yield better than any other market because the properties haven't appreciated as much. So the rents have kept up a bit better. So if you're looking for yield, Indy's a really nice place. If you're looking for maximum ROI, which is yield and appreciation, then or Dallas. If you want pure ROI, then Austin's a great option. So we're trying to create an opportunity where we can be completely objective with the investor and help them choose versus being like, you should do this, right? Because we think that it just disaligns your incentives.
Do you take much of an advisor role in that transaction? Like, are they asking you where do we do it, or are they pretty much coming in and going like, look, I'm interested in some of the Midwest towns that haven't yet appreciated, and there are some investors, like Mobile, Alabama. Some of those places are starting to get hot because investors are priced out of Scottsdale, Phoenix, they're like, they need to go to the tertiary markets. Are you advising that, or do they know already?
Each investor is different. We have investors all over the spectrum, from investors who are buying their first investment property and all the way to investors who own dozens. And so, folks that are buying their first, we do take a pretty active advisory role. I think that's probably something that we'll do less of as our platform develops and gives more data to the investors. But at the end of the day, they're deploying $100,000, right, or more. And so some advisory role, I think, is needed, and we're happy to provide that. But mostly we provide the numbers. We do the underwriting so that they can see what the difference is, because we find that like there's a lot of stories around why the mall's going to go here in Pittsburgh and that's going to change property prices. But the data is just so much more powerful to tell that story in an objective way. And that's what we're trying to provide for our investors, so that they're making smart decisions driven by data, not necessarily driven by like hearsay or other kind of like, story type things.
Yeah, I love that. Is there data, like particular measures that you find like particularly useful for investors? They go, well, man, I mean, Indy, maybe tell me like what should I know? Like yield is interesting, but what other data points might you use to help me understand Indianapolis?
So we have a very specific lens on it. So we have two sides of how we think about properties. One is we're going to think about property appreciation potential, and that's by itself, the house separately. And so that's macro drivers in terms of growth to zip code and sub code growth as well. We get into that data set. In addition to crime, and we look at trends over time and how those things are kind of improving or getting worse, right? And we've also started to incorporate some Snapchat type data where we see younger demographics are migrating to different areas. We find that to be an interesting variable. And so that kind of formula is really around how we're driving future appreciation potential for our property.
Yeah, that's keep going.
The other side is, oh no, I'll let you interject there.
Well, I was just asking about, I was thinking about the younger demographic, the tracking that trend, and is that you said Snapchat like data? Is it like coming from things like sources like mobile data that where you can correlate with, with age and then migration, and really the interesting question is, has there been surprising changes in the last couple of years that you've seen there, like in our wacky new world?
Yeah, I mean, the truth is our data models are relatively new. So so one of the things with our Snapchat data is like we have transactional data and not as much historical data that we've linked to. And so we're using that to triangulate future performance versus kind of some of the trends. Our trends on crime and our trends on migration, those are a lot better. Those are a bit more historical. I think the trends that we found the most surprising is the things we found the most surprising is when we're forecasting rent by the room pricing is like the variables that don't matter at all to how much a room should rent for. And that's the stuff that like kind of blows my mind. It's like, I would expect the amount of migration movement in and out would affect it way more than it does. But what we find is like age matters almost more than anything, and income matters more than anything, which is kind of like boring because it's sort of like exactly what everyone already knew. And it's like, damn, we did a lot of data science just to get back to the answer that was sort of just the vanilla ice cream of all answers. Anyway.
Yeah. So, but but it's actually good to know that, because you like, there's always hypotheses like this is going to tell me something new, or and so it's like, what we can show is that what we need to know is we need to know age and income, and that trend is valuable, right? And if the income is climbing, if the age is declining in an area like that, those are powerful signals for the future.
Right.
Yeah.
Yeah. And powerful signals for how much people will pay for a room, that's the piece. We plug that with appreciation, and then we see how much someone can make in their total performance of that property. So that's the product that HomeRoom is offering investors. We're going to do that whole underwriting, and the room rent piece doesn't exist anywhere, right? It's completely proprietary to us. There's no data model you can buy for room rent pricing, and that's something we're really excited about.
That's cool. I like that a lot.
Yeah.
And so then you sign individual leases with individual roommates?
Yes.
That's how it goes?
It's a member agreement that's transferable to any room across the portfolio. So we have people who move from different cities, which is really cool.
That's cool. And so then as a renter, one of the benefits for me is that like I've already gone through my landlord vetting, and I don't have to get my credit pulled and all that stuff to get a new landlord. And I can move through the portfolio. And then I can imagine there's like the Uber rating, the driver rates me kind of thing. Like we know if I could imagine that you might want to do that in there.
Yeah, we do a rating. As a roommate leaves, they get a rating, and then the roommate, and they rate the roommates. So we didn't want to do a rating in the house, but as you leave a house, you get kind of a scoring. So yeah, we're definitely doing something very similar to that. Trying to do it, you have to do it just right, because you don't want to miss people that live together, which is would be obviously a big problem.
Yeah. Right. And ratings in general are like it's nuanced, right? And
Yeah.
He had one weird habit that I didn't like, and like that's that, but maybe that says more about me, right? So those are tricky.
Definitely.
But I love that concept in that you build like a transferable benefit, and that especially as you move into some bigger markets and exciting places to be, like, well, I've been in Austin and I want to go to Manhattan, and like if I can already be vetted.
Yeah, we're kind of looking at there's some of these really cool platforms that you can like live, like Zeus, where you could live if you have 5,000 a month, you could live anywhere because it's already furnished, and it's kind of like this dream way of living if you like to travel, if you like to move around.
Yeah.
Some people prefer not to move ever, right? But like other people are like, I wish I could see the world while living. The cool thing about HomeRoom is our average price point is like $450, so you can live kind of like that, but for 1/10 of the price, which is pretty awesome. And
Yeah.
I've done it myself. I've transferred to a few different properties. It's badass.
That's great. That's so cool, and that's a real interesting trend. So let's talk about that trend in the future there, which is that the sort of nomad person, the digital nomad, the work remote person. A couple of questions that I'm interested in with all my guests here, and a lot of the conversation I'm is have you seen new trends, work from home trends, or things like that have impacted your business, or like changes in your data, and then where do you see it going in the future, based on your frame of the world? Like, you're in Austin, big part in Austin. And, one of the reasons you go to Austin, it's a cool town, but like there's some really cool employers there, but it's also expensive. So, if I can live somewhere else and work for my Austin employer. So anyway, tell me about if you've seen any trends, notable trends, that like, as we went to work from home, as we're shifting back into some kind of go into the office, and then where you see the world going in the future.
Yeah. We definitely, for us, we have 5 people in a house. So we saw an interesting COVID work from home trend where, no one was moving at all, right? Everyone was just at home. And so there was definitely a period of time when no one transferred, but everyone was at home. And so it's like pushing the limit of how many roommates can comfortably live together, because part of our model is that most of them work, and so they're not going to be at home, so it doesn't like it's less strain on the house. So we've a lot, I would say about 50% of our folks stayed home and work remote. Other 50% were going into work as well. So that's it's we're seeing way more transfers in 2022 than we've ever seen. So I think people are taking advantage of that, and that's inner city and within a city and between cities. So we're seeing a lot more. The world's opening up a bit. I think that's kind of in line with how I'm feeling personally. But going forward, I think I see a world in which people feel comfortable living. A subset of the population feels comfortable kind of migrating around and living in different areas. You hear these stories of people that have kind of lived, and I think kind of you hit the nail on the head, like working for an Austin employer, but living in somewhere cheaper is like a great way to save a lot of money really fast. Right.
Yeah.
So I think we're seeing that. I've done that before. And we're seeing more and more migration towards these tier 2, tier 3 cities. And I'm not as privy to like how many of them are holding on to their jobs, to be honest, or if they're getting new jobs, because we don't ask. But my hunch is that a lot of them are doing something along those lines.
Yeah, that's really that's exciting. Do you have how about, tell me about your company? Are you guys virtual, or do you have an office? What are you doing?
100% virtual.
And are you spread all over the country or all over the world?
Yeah, we're all over the world. We have, half of our companies in the Philippines. We have 10 in the United States, 27 in the Philippines, half dozen in Latin America. So yeah, very, very global workforce. We have one straggler in Spain. It's been and our engineering team is in Vietnam. So it's, the COVID really opened up how this is done. And it used to be looked at, if you do what we're doing, it's like, it's the kiss of death. Like you're not going to make it. But now it's like you're smart. So I guess, I don't know. I don't know which one it is, but it seems like it's working so far. Yeah.
Good. That's exciting. And I'd love to, if we have time at the end, we could chat about the Y Combinator experience. Because I know you're in that program now, right? Or did you just finish?
We just did demo day actually 3 weeks ago. I'm that sounds exciting. Let's do a couple more things before we dive into Y Combinator. As we look at the real estate market, and especially in the last decade, we've taken a bunch of homes out of resale and we've made them investment properties. We have fewer and fewer homes for sale. We have this inventory shortage. We actually have a rental shortage right now too. Rents are climbing. Do you have a view of how the homeroom contributes into the ecosystem of available housing for people and affordability and those? What's your vision for that when we think about the real needs of housing for Americans, especially young people who don't yet own homes? What's your view in the next decade or so? Yeah. Honestly, I can talk about our contributions and, for sure, I do think that this is a big problem and I'm not sure. And it seems to be getting substantially worse. One of the things that we're seeing, right, we saw this really nice nice depends on who you are, appreciation pop in almost every market in the United States recently. And what that did effectively is it meant that people that lived in houses no longer could afford to rebuy that exact same house. If they sold it today and they went to go buy it again, they would not qualify, which means that the only thing that someone could do is sell and downgrade, which no one wants to do, right? So you're kind of got this issue where why would anyone leave their home to make that upgrade? That's very, that's you save up, you get to the next house. It's become very difficult to make an upgrade when you sell. So that's put a lot of inventory in stasis with primary homeowners. And so that is only getting worse with the rapid appreciation of properties. I think you've kind of touched on it, layered in institutional buyers buying homes, creating rental properties, it makes it worse. So this is a problem that I don't know. I don't know what the answer is to this. I think regulation may be something that has to be looked at. Housing stock does not seem to be on the rise at the pace that's needed because builders still have a memory of 2010 and they're just or 2007, they're still scared to overbuild, which is guys, it's been a long time now. Let's kind of let that go. Let's build a little faster. It's kind of like what I keep thinking, but it, doesn't matter. They're a conservative lot. So that's a big problem. I don't know. I don't know what the answer is to that. Building more is the clear answer, or some sort of regulation. I don't know.
Yeah.
In terms of homeroom,
yeah.
I mean, what are your thoughts? I'm very interested. This is an interesting, massive challenge that I don't see an end in sight today. I don't see a clear solution.
Well, I love the concept of density as one of the things we can do to improve the inventory challenge, right? And I'm an investor in micro apartments in Seattle, for example. And what that does is it's actually same target as you're talking about, where it's people who, maybe it's $1,000 a month. And normally to get $1,000 a month, place in Seattle, I have crazy roommates and I have to go deal with all that thing. I don't have a homeroom to go sort out all my roommate and stuff.
Sure.
But so one option is to you rent a micro apartment, a couple hundred square feet, with high end, nice, nice amenities, a nice building, and but I have my little unit, and it's all mine. And so that density does a couple things. One is really great return for investors, but two, it's more housing. And so I like the idea of density, and optimizing investment homes for more people. I think is a positive contribution for that trend for a real crisis in the country. So I'm going to give you it's like, you're fighting for housing. You're a crusader for affordable housing, simply by virtue of having the density. So that's an appealing process to me.
Got it. No, it makes sense. In a lot of ways that HomeRoom is doing something similar to that. And, our rents are 50%. We don't talk about this as much, because we're, investor facing in a lot of our comms, but, to rent a room at HomeRoom is 50% cheaper than renting a studio apartment in like the same neighborhood. So, and we're taking one unit and making it into 5, right? And, and so there's definitely cities are like, their eyebrows go up. They're like, what about zoning laws? Like, well, we could have that conversation, but like every study that's coming into City Hall is saying like there's not enough affordable places for people to rent.
Right.
And it's like, you could solve that in 7 years, probably, or you could let HomeRoom come in and solve this for you today. Right.
Yeah.
And so that's I think that's a lot of what I like with Austin and Picasso is that they're doing something similar in the sense, yes, they are buying housing stock, but they're optimizing its use so that less housing stock needs to be consumed by people that aren't utilizing it in an efficient way.
Yeah.
And so that in effect, but maybe that house isn't available, but now other homes are, right? Because he's being more efficient with the space. I mean, that's exactly what we're doing, right? We're creating really affordable housing. We really want to create a financial future for people. And so if you spend $350 a month on rent instead of $800 plus utilities, and also we're more flexible, like it's just a better deal. So
yeah.
I think the density thing that's the number one answer in my mind. Like, I don't see one that's better, especially for repurposing space, or using space that was, being left on the sidelines.
Yeah, and that's the benefit of the sharing economy, right? Is that those assets were previously unproductive. They're sitting there, not being used, and meanwhile, there's a class of people who need to use them, and they can't get them. And so, like, I think there's a real strong story there. It makes a lot of sense to me, and the flexibility and all the other benefits is like that's a bonus. But really, we need some density right now, and a lot of American cities, especially ones that are fighting affordability challenges like Austin, rapidly becoming unaffordable, like, to everybody except those of us who move out of San Francisco, and so it's like it's a powerful element that a community should use.
I agree. I think it should be a big part of the mix. We actually had the city of Topeka reach out to us recently, which was like was very cool. They said, like, can you come here and be part of ours, like, as we launch our startup ecosystem? I was like, because like we need more density near these areas. And it's like, yes, this is the kind of outreach that like we'd love to see. And like, it's like, okay, that city really understands like that there's a solution available, and maybe it's not glossy as like they'd like it to be, but it's fast. And it's elegant, right? And it's elegant, and we do it really, really well. People are really, really happy. They're beautiful homes. So, I think it's one of the solutions.
That's really terrific. So Topeka reached out to you and said, "Hey, we want hip young people in for our startup ecosystem. We need hip young places for them to live. Help us make that happen." That's exactly what we're looking at, right? Like you're recognizing the challenge, and it's what a great story that is. And typically we have there's the NIMBY argument, which the don't put density in my neighborhood, But density is, typically thought of as like, concrete, bunkers that, as opposed to like single family homes that just, happen to have a nice group of people living in them. And so,
NIMBYism is very strong, I think, in all housing discussions at the city
anywhere we
level.
go.
Indeed, anywhere you go, we've had, in cities, we've had one person that cares, and like, it becomes a city thing that is a discussion. It's just like, all right.
Yeah, and there are
does,
probably some cities where it'll be hard for you to go operate that have real entrenched NIMBYs and laws and things, but there's a lot of the world like if Topeka cares, they're taking action, and that's really exciting.
Yeah, and we'll go there, right? And we'll help there. A lot of the folks at City Hall have 23-year-old kids who like maybe still live at home, right?
Yeah,
and so like I'm here to help you, right? Where HomeRoom is here to help you not have your kid live at home anymore.
One of the
do you want
one of the live at home concepts that we were discussing recently, I think on the podcast actually, was that homes built whatever 70, 80 years ago were significantly smaller. And so, if you have a family of 4 and it's a 3-bedroom house, and you come out in the late 50s, like there's no place to live at home. And now homes are bigger, and you've got basements, and like it's like easier to live at home, and therefore people do. So, our kids like, why are you living at home longer? Well, there's space in the home for me. And so that shift is also that stock becomes investable and dividable, and more create more density for future investors, but also for the tenants as the stock shifts.
Yeah, and those basements are competitively priced for that kid with their parents. Very competitively priced.
That's right. That's exactly
typically free.
Yeah.
We actually saw during the pandemic, we saw a surge of, it was the highest percentage of 18 to 35-year-olds live with their parents since the Great Depression. And so we've seen actually a lot of kind of like people, it's like flowed in, and then they're kind of flowing out into HomeRooms now. But it's just kind of a crazy trend. And not one that I'm like envious of. I don't have a young adult child, so I don't have to worry about it myself. But yeah, I think the solution for that, so people don't have to go home, like there's not a stepping stone there, right? And micro apartments like you're talking about, or co-living is, I think, a perfect solution.
Perfect solution. That's super exciting. So let's talk a little bit more about the Gen Z. And that's is that your target really? Is it Gen Z? Is it late millennials? How do you think about your renters?
Yeah, I mean, our average age is actually surprisingly high. It's 29.
Okay.
So yeah, so it's not, a lot of folks, it's not we actually don't do below 21 years old. So we're not really focused on college age kids. Pretty much like it'll be your first place out of college or later. And yeah, that works really well for us because people stay a lot longer. They're not in like a phase where they like are Tasmanian devils to the property, which is clearly better for if you're an investor. But yeah, there's just, it's just a stopgap with the marriage age going so late. You have basically, the studio apartment was great when like you would get out of college at 22 and then you get married at 24 and you spend 1 year in a studio. That was awesome. You're like freedom by myself. But like when you're but now it's 35. And so do you want to live in a studio from 22 to 35, like 13 years living alone? There's no time in history where like people alone for 13 years by choice, really. Like it's just, humans are meant to be more communal than that typically. Not everyone. There's a lot of people that are like, I'd love to live alone for my whole life, but like a majority of people live with other people, roommates, their parents, their family, their girlfriend, their significant others, but not alone in the studio. So just an interesting kind of demographic trends and how housing is shifting.
Yeah. So 29 is your average renter age. And was that, Was that intentional, or you just learned that after you started marketing it?
Not intentional at all. I mean, we've had over 1,000 roommates now, so it's really just the data that we have accumulated over time. It used to be a bit younger, it used to be 27, but it's kind of floated up.
Okay.
So yeah.
That's interesting. So the age is increasing. And does that vary by market? Do we?
It does vary by market.
Yeah.
Yes, definitely. Yeah, we find that if there's a spectrum of San Francisco to Des Moines, I guess, if you call it that.
Okay.
The Des Moines are younger, and then the San Franciscos are older substantially. So Austin is our closest proxy to San Francisco, so that's the oldest. And then Indianapolis would probably be our closest to Des Moines, and that's the youngest.
Right. It's also varies. That's by affordability too. Yeah.
Yeah, affordability makes a big difference. There's a way bigger necessity to do it in the more expensive markets. Like when I lived in San Francisco, I was a VP at a bank, and I lived with a roommate. Like it doesn't matter. Like because no one wants to spend like 3, 4, 5 grand on a private studio. So.
Yep, I get it. It's a real thing, and like density, San Francisco needs some density, right? Like we need more.
San Francisco needs a lot of density, man. It needs a lot. Yeah.
Awesome. Let's switch in the last few minutes. Let's talk a little bit about the startup process. Tell me about the process of getting the company off the ground. You said it was a personal need that you started addressing. Tell me more about your startup process.
Yeah, I mean, I read Hard Thing About Hard Things. Great, fantastic book.
Ben Horowitz. That's Ben Horowitz's book.
Yeah, it's Horowitz's book. And we actually and decided I'm never going to do it. I was at a startup at the time. I was like, I'm never going to do a startup ever. This sounds terrible. But then in 2015, when I moved to Austin, to be kind of like a real estate investor, I was like, living in San Francisco, VP at a bank, but still have roommates. Like, am I ever going to break out of this kind of like lower middle class of the Bay Area with this kind of career path? And so started to invest heavily in real estate. And then realized there was a lot of people that needed places to live like this, and that it was a great return for investors. So I kind of was seeing like the need, and I was like, okay, this seems like a good idea. And I was like, but I don't want to do a startup. So that those were in conflict. And I think it was when I finished my third property in Austin, I was like, I think this just needs to be done. It needs to be done. Every time I put a property up to rent rooms out, I've got like 50 people trying to get a room in one of my houses. Their credit's crazy. Like, but no one, and so why isn't anyone doing this?
Crazy good? You mean their credit's crazy good?
Yeah. The credit's like 810. It's like, but no one, like, these are the best tenants in the world, and like no one's providing them a service. And so I thought about it for like 4 months. The startup I was at was like kind of like on the outs, and I was like, so I emptied my retirement account, thought Kansas City would be a better place for investors to buy homes, and so I started the company with the idea just to purely bootstraps it. Like I was just going to bootstrap it with my retirement account. And I got some advice that said, don't do VC, because like if you go that route, like the risk and rewards go up exponentially. But it's also the pace gets crazy, all this stuff. And so I was committed to do that. So the first 2 years I bootstrapped it in a basement. We had, no employees. I was running it alone. But I was learning about the customer and getting a lot of feedback from the tenant side, learning about properties, learning about the investor dynamics. And then I realized like that I'm not solving the need I set out to solve without investment dollars. There's sometimes you need some investment just get over certain humps, where if you don't have like a second, third, fourth employee, an engineer, like you're just like kind of boxed in. And so I decided, I had a few friends that had asked to invest in the company. They gave me a couple $100,000, and we were off to the races. Right over the next 18 months, we grew like 8x. We went from 2 employees to now we have 53. We just finished our Y Combinator batch. Over the last 12 months grew 6x. We're now in 8 metros. I don't know if the way that I did it was the right way, to start bootstrapping it and just pure agony for 2 years. Um, I learned a lot about the customer,
Yeah.
and it gave me a lot of knowledge. Would I do it for 2 years next time? Probably not.
Well, you don't
Probably
have to do it
6
next
months.
time because you've already got it under your belt.
Yeah. So
That's
yeah, so
that's really terrific. Yeah, and I think I'm a big fan of that. Learning about the customer. For me, it was like I did 100 sales before I hired a first sales guy. I had done 100. But then when he was sitting in the office when we were interviewing, and I get a phone call and I close a customer on the phone while I'm interviewing the sales VP, he goes, well, I can do that. It was like, that's how you know the customer, right? You do 100 of those yourself, and then you get
right.
it figured out. That's
Yeah.
really neat. And real quick, tell me about the Y Combinator experience.
Yeah, it was it was a dream come true, honestly. Like, you hear about Y Combinator and you're like, and that no one gets in, it's kind of like, and so I decided, we tried to get in a year ago and we didn't get in. And so then we basically learned from it and kind of iterated on all these different pieces. And we got in early, which means we were like kind of at the front that really liked us. The first piece is you kind of go in, you talk to Cybele and like the gang, and they like grill the heck out of you for 8 minutes. And if you show any weakness, you're done, essentially. So you got to know your stuff. You got to prep a little bit. But in general, it's phenomenal. The pace is really fast. They push you on product knowledge, and they push you on tightening the way that you communicate. And I already talk a lot, but like I would talk to you a bit more before YC. Like, and so they basically helped us distill a 2 sentence description, which is incredibly valuable. They helped us think about how we go after investors. They helped us to think about the timeline of how to raise investment. They connected us with other prop tech YC folks that are like super incredible people, like high caliber. So you get like a social group. And then they talk about how great you have to be successful over and over again, which is a little bit discouraging. It's like they like say most of you will probably fail, or not do that great, which is like, but it's also like realistic, right? It's way better to not start to like not to buy your Ferrari like when you get into YC. You have to wait. Your chances are still small. So it's a phenomenal experience. Some of the best like fundraising advice, product development advice, and just kind of like team dynamic and culture and how you think about money advice, like ever, as well as founder mental health. That's something that they started to address, I think, recently with founders, and it's really helpful to know that you don't have to like suffer and die to have a startup.
Yeah, that's neat.
Like,
I didn't realize they were focusing on that. That you can imagine that all the other things you were talking about could detract from founder mental health. So you need to have some of that balance in there to make sure you keep going.
Yeah, they said that they didn't used to do it.
No, I can imagine.
It was like 4 years ago, where like one of the partners at YC, she's like, you guys are totally messy. This is not good. And she like was a psychologist. She pushed for it. She started a company, and then she pitches every batch, and it's become part of their curriculum. So I think it's enormously valuable.
That's really great. Cool. Well, that's exciting. And Y Combinator means the best there is. So that's an exciting group to be a part of. And of course, they like the platforms, the platform, and if you can build both sides of that platform, both the inventory side and the customer side, it's you shake your head like that's a real hard challenge, huh?
Oh my God, man. Marketplaces are really cool because you bring people together, you help, you create an ecosystem, you create like a platform, it's beautiful. But it's also really hard because like your brain is always like splintered in multiple directions, and that's much harder than doing like one thing. Yeah. And so I if you like marketplaces, do it. But yeah, it's just a special kind of challenge, but all startups are.
For sure. Johnny, that's really terrific. I appreciate your time today. I love hearing about HomeRoom and about what you're building. I love that it's, it's a personal need. Like I started Altos Research with a personal need too. And, I bought my house in Silicon Valley, my little old piece of shit. I'm 30 years old with $1 million mortgage. And, this is 2 bubbles ago. And that NASDAQ bubble was bursting. And I had to know what was going on. And I just started building the data models to know. And after a while of doing that, I realized that I knew more than anybody in the world. So we decided to commercialize it. And but it makes a big difference when it's coming from, I know exactly that the problem I have, and I seem to be solving my problem very quickly. And, however big my universe of that people with that problem is, it's very specific, and it's working, and it's not invented. It's not like I think somebody else has this problem, which is so compelling to me.
Yeah, it's cool that you popped your head out and just like, that kind of happened with our team, right? We were just like trying to hang in there, and then all of a sudden we're like, we just worked hard, and we'd be surprised we're good at it now. So
excellent.
Man, it's really cool that you're solving your own problem as well. Very
so let's finish up there. Tell us about the next 5-10 years with HomeRoom. What's your vision, and then where can people connect with you and find everything?
Yeah, we'd like to be in every market in the United States in the next 5 years. That's the goal. We think the need is, because I moved from San Francisco to Austin to Kansas City, we've seen the need for roommate housing exists, like not just in San Francisco, but in like Olathe, Kansas, and Topeka, places like. So the need for this type of housing, it doesn't matter if housing is inaffordable or not. People would prefer to pay 50% less for housing, and some of them would prefer to live with other people to have community. And so we think that every city in the United States could benefit from this. So that's our goal, is provide in every city. In 10 years, we'd love to see it be a global brand, global housing brand. Big dreams it's recognizable, and people live with HomeRoom in different form factors of housing globally because they know that the experience will be amazing, and it will be consistently great, right? And it will be consistently great value. So that's how we think about 10 years.
Amazing. And where can people find you? Where do we direct people to connect with you and HomeRoom?
Yeah, so livehomeroom.com is our website. You can, there's 2 spots, marketplace, 2 sides. You can invest or you can live. And if you live, you can kind of take virtual tours and see the roommates. If you want to invest, you can go to our invest page, book a call with our team. They'll walk you through how the model works for investors. You can also email me directly at johnny@livehomeroom.com. I love to chat with house hackers or people that are doing real estate investing. It's sort of gave me a huge boost in my life, and it's fun and it's interesting. And so I'm happy to, provide insight. If you're going to try to rent out rooms to people, we're happy to kind of give you our thoughts on how to do that the best way possible.
Love it. House hackers. I love the concept.
Yeah, me too. Yeah.
Awesome. Johnny, thank you so much for taking the time today. Everybody, this is the Top of Mind podcast. Thanks for joining me. We will be back next week with another episode with the leaders, the thinkers, the doers in the real estate industry. So join us again. Thanks, everybody.
Thanks for listening to Top of Mind. See you again next time, and be sure to click subscribe to get future episodes.